Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 8th of January, the first one of 2023. I'm Phil Carroll and I hope you've all recovered from the festivities. New year, new start and all that. What are your goals for 2023? I guess some people have got some. I don't really like resolutions, just more new goals. So what new goals have you set, Kev, for 2023?
Oh dear, the normal one. I want to lose at least 10 kilograms, but that 10 kilograms seems to be elusive in the last few years, I have to say. I'd like to buy a house this year or an apartment. That would be nice. What else? Yeah, I have set goals, and I'm trying to set goals for different areas of my life, like making a conscious effort to spend time with my wife, spend time with the kids. I want to actually learn something as well this year. I said to myself, and I need to study something. I need to learn something.
Good idea. I mean, a lot of people say that, don't they? I think languages come up quite high on the list. Obviously, I think the number one resolution or goal is fitness, to join a gym. But ironically, 80% of people that were surveyed said, I want to join a gym. But then said 75% of those that said that they wouldn't be attending the gym in February by the end of January. So it's like already the mindset is, I'm going to join a gym, but there's no way I'm going to last longer than 30 days. I mean, it's just, you set yourself up for failure there, don't you, with that sort of mindset? But
no, absolutely. I have a free gym that I've been a member of since October, less than 100 meters from my front door. I haven't actually been yet.
Yeah. I mean, I've got one of these Peloton bikes, and as you know, I've had it, and that's been my goal, and I've been on it nearly every day since the middle of December, and I feel I do feel a lot better. I'm probably a little bit more tired because I'm doing it every day, but ultimately I've got more energy when I've got energy as the day moves on. Obviously I flag a little, but that's just about getting used to the fitness regime and everything. But back on booze as well, that's been, as you know, I drink far too much, but ultimately I've been on the wagon now for a good 3-4 weeks, and I'm feeling a lot better. So well, hopefully that one will continue, because
I've gone dry as well.
Oh yeah, you needed it, mate.
But actually, I've decided I'm not going to drink any more Coca-Cola.
That's a good one, mate. It's probably as bad for you as some of these alcohol. I thought you were going to say you're going to start drinking when I quit, so that when we go away or whatever, you can go and get all these beers and rub it in my face.
Yeah, I'm wondering when we go to Indaba in South Africa whether beer will be on the cards. You'll be like, no, I'm not drinking. I cannot believe that's going to happen, to be honest. But
if I'm over there, I might have one or two. But drawing the line. The problem with me is I'm an all or nothing person. So it's like, one is not really doable. But anyway, so that's something I need to get over this year. But so in the week where we've seen the Ukraine rejecting Putin's Russian Orthodox Christmas truce, it was a bizarre request of a 36-hour ceasefire from Putin to his defense minister, as if Ukraine are going to take a break from defending their country because Putin thinks it's the right thing to do after talking to the head of the Orthodox Church. What are your thoughts on that one?
Yeah, just bizarre, really, to be honest. If you could believe him, it was a noble gesture. But actually, based on what he's done so far, then for sure it's not a noble gesture at all. But actually, the talk was that this was going to be an opportunity to restock and regroup his troops. So
there was a sad story coming out.
I think it's coming to an end, though. I think this war is slowly but surely coming to an end. I think it has to. I am an optimist, obviously, but I do think it's going to come to an end. And the world, the last few months of 2022 seemed like it was in a bit of a spin, but it actually feels like it stopped spinning just right now, and we're just getting used to the reality of what we've got to go through over the next period of time. I think
there was some good news coming out of the infrastructure bill type thing. So there was an announcement that work to build England's biggest wind turbine will start in February, which is obviously a big positive. It's a 150-metre structure which will dwarf the other turbines already in Avonmouth in Bristol when it is finished. Around 100 tonnes of steel and 1,000 tonnes of concrete will be needed to build it, and it is hoped it will be up and running by spring, providing low-carbon electricity to 3,500 homes and saving 1,965 tons of carbon dioxide per year. It's all about the CO2 emissions. Obviously, the UK output is on the decline, but most of the developed countries have massive CO2 emissions from the burning of fossil fuels, which obviously contributes to the greenhouse gases and obviously ultimately the warming of the earth. I mean, I don't know what if you've seen the reports certainly in Europe. I mean, it's pretty much constant temperatures in Egypt, but in northern Spain this week it hit 25 degrees in the 1st of January. I mean, it's 10 degrees above the normal temperatures. I mean, in Europe, there's no ski resorts are shutting because there's no snow.
It's bizarre.
It's frightening. So what do you think about the infrastructure bill? I mean, obviously with that, we've had the announcement of the coking coal major coal mining, first major coal mine in 40 years up in Cumbria, and obviously now this announcement about the England's biggest wind turbine. What do you think of this? Great news.
I think it's great news. I think it's really good news, but at the same time, I think Joe Public doesn't really care at this moment in time. It's like things that have happened in the past that we were all like, yeah, let's go green. And now everybody is basically, or not everybody, but a large majority are saying, hope my money lasts and let's eat and let's heat the place, and hope spring comes soon, Exactly. So I think the reality of it is that the EV train, if you like, just went too fast.
Yeah.
And we weren't able to keep up with it. And this is one of the reasons why in 2023, I really think we're going to have a resource sector bonanza, because all of these resources are required to keep doing those things. I mean, you said 100 tons of steel. Well,
that's what you need
for the 100 tons of steel. A lot of iron ore. You need a lot of metallurgical coal.
Yeah.
You need somebody to, build it, which is probably like the likes of Harland and Wolff or whoever it is. So, I mean, and even the concrete. You got to have the concrete. You got to mine again that stuff. So we need things, and those are commodities.
Oh yeah, for sure. I mean, Friends of the Earth are the ones that want to take legal action against the government. And then Michael Gove basically saying he acted unlawfully. But then when you read it, the mine near Whitehaven is expected to extract millions of tons of coking coal for steel production each year, which then goes into the turbines, as you said, the hundreds of tons of steel. So which one is it? When do you think these Friends of the Earth are going to suddenly start to realize that actually we need this infrastructure to drive these turbines, to manufacture these EV cars, for the green side of things?
Maybe never. I mean, but it's a reality, isn't it? It's a reality, and a lot of that drove what we chose in terms of our 12 stocks as well, because the whole EV thing isn't going away. It might be going slightly slower, but the reality of the situation is that we need the resources and we need the things to build what is required. Yes. So if we don't have those things, then forget it. It's, Friends of the Earth's going to win its argument, but actually not have a green world, because there'll just be lots of coal being used and gas being used forever, as opposed to, us going more green.
Yeah.
So, yeah.
So that, I mean, bringing on to that subject and segueing nicely into those 12 stocks. Obviously, you mentioned the EV side. So, we've got the Technology Minerals, which was the first company covered, obviously being a circular economy, battery metals recycling. They're working towards extracting raw materials required for lithium-ion battery cathodes, and not only that, they've got the lead acid plant as well. So that is really kind of on point and on topic company, isn't it? Really, as we've just been talking about, in terms of it's a problem that really does need solving, right?
Yep, it's going to solve huge problems, and also it's a mining company as well, or certainly has mining assets. I mean, effectively, in 2022, it's been battered because of delays and government delays as well, because they were ready to rock and roll and the government hasn't been giving them the licenses. The reality is that the governments also need to get their finger out. But the share price was battered, 1.4 pence.
Yeah.
We have a target of 5p on it, so you will sort of treble your money or more. And I think that could be conservative if the government pulls its finger out and gives them the licenses, to be honest.
Yeah.
Even the mining stuff they've got, I think, copper, cobalt. What else was there? I think lithium. Yeah. So a lot of potential, a lot of upside there, I think.
Yeah, for sure. And as you say, it just needs that catalyst, hopefully, of the EA permit for the first plant for the lead acid at Tipton, and then eventually one moving forward to get the second one for their lithium ion or Libat plant.
Yeah, absolutely. And then I suppose the first three choices, really, when you look at it: technology minerals, Jubilee Metals, which is a big producer in the platinum group, but now is moving heavily into copper in Zambia.
Yeah.
So again, the copper is for the EV metals, and we've also got then at number 3 African Pioneer, which is copper and gold and potentially cobalt as well there as well, I think. So yeah, Jubilee Metals, I think, a much bigger market cap company than a lot of the other stocks that we've chosen, but we really think that it's spent a lot of money on capital over the last 18 months, which has put it in a position now where the revenues are going to start to rocket. Even if the prices of those commodities don't go up, it's going to exponentially increase because of the ability to produce more. So the share price now looks depressed, really, at sort of between the 10 and 11 pence scenario. And we have a target of 18p on it. So what do you think of African Pioneer then? Yeah,
I mean, obviously it's been beaten down, hasn't it? And obviously the Sandfire being a significant holder in that company from the IPO, and obviously also a JV or offtake agreement with, not an offtake agreement, sorry, a partnership, let's say, with First Quantum. It looks very exciting, and obviously the big news this or last year is the fact that the Kalahari Copper Belt has been under the spotlight with the likes of Cobre, in the mix, and reactions to just how good a grade some of those finds are. So it seems to be ramping up. There's a mine there, isn't there, that's ramping up into production.
Cobre itself went up many hundreds of percent on their finds and on their drilling, and on the fact that they're going into production. And the licenses that AFP and I think Galileo hold are right in the middle of this. right in the middle of it, sort of extending the strike, if you like, from where they are. So I'm very excited about that one. We were very excited about it last year, and it sort of didn't come to fruition. But these things take time, I think, and obviously that was included last year, and we still expect it to do extremely well this year. Target on that one of 6p, so that's should be doable. I think it hit about 4.5-5p, didn't it, the last year at sort of one of its peaks. So certainly into the fours. But moving on to the next one is a bit of a sea change. Is BSF Enterprise Meet As You Know It. Exciting news about 2 months ago, whereby they announced that the 3 prototype fillets have been made. And they're obviously gearing up to showcase the larger piece of pork fillet, which hopefully will come in sometime in Q1 or early Q2. Obviously, watch this space for that one, but certainly looks exciting, doesn't it? The technology, and if that technology was on any other stock market, like in the US, on one of the technology markets like the Nasdaq, it would be into the hundreds of millions of dollars worth of market cap. Yeah, and I think that's all you need to say. Yeah. It currently has a market cap of £15 million. And as you said, I think it would be minimum $100 million on any other market, because of the potential that it has, both with its City Mix product, which is the product that allows the meat to develop, if you like, to grow. And we all eat a lot of meat. And, from the point of view is they're getting grants galore from people who want to protect the environment as well, because this could be a game changer. Suddenly you don't have to grow and feed huge numbers of cattle. This can be a part replacement. It's never going to be a full replacement. We're never going to just eat this type of meat, but it could definitely be a part replacement. And that would obviously help the
and
environment.
That's just one part of it, isn't it? That's just one part, as you say. You've got the meat element, you've got the city mix, which is obviously something that can be IP'd and then basically sold on. As long as they can economies of scale manufacture it, bring the cost down, and actually start to manufacture enough of it to give to other companies, because they're not really going to become an actual manufacturer of these meats and actually grow it in the labs. They're going to be providing the city mix, the IP. They've got the corneas as well, which are obviously the parts of the eye.
Yeah.
They've also got the leathers. They've got the cosmetics. So it's not just a one-trick pony.
Yeah, and also the company with BSF Enterprise plans to have more companies within its stable. This is only 3D Biotissues is only going to be one of the companies of the stable. That was basically the way that they came to the market and suggested that
So
this would happen.
What target has been put on that one?
We've put a target of 30p on it. I personally think it could do significantly more than that, but we're being conservative.
Next one, Prospects Energy. I mean, this is an exciting one, isn't it? There's a massive retail following for this stock, and obviously Mark Routh was included. We spoke to him a couple of times now, and it all looks very exciting for the for first gas in hopefully Q1 of this year. So not too far away now, really.
Yeah, you're not going to get any dusters here. It's all there. It's proven. It's coming up. It's just a case of getting the pipeline out, and Bob's your uncle. The gas is going to start coming up. So there's nothing to prove here. Absolutely zero. It's a case of, gas is going to come. It's in Europe. Do you think Europe needs gas? I think it does. So I think this, for me, it's wrong to say it's a no-brainer. But I think this is just going to be a massive cash cow, and quite quickly as well. Within the next 3 to 4 to 5 months, this company is going to be plowing out cash like there's no tomorrow.
Yeah.
And they've also got, I think, some solar stuff as well. And other targets and other opportunities.
But they've got the Southern Spain one, haven't they? They own 49.9% of it, which is that one with which is basically Warrego have confirmed that it's received from Strike a confidential, non-binding, indicative all-share merger proposal. So that kind of is like going on in the background as we speak. So I guess shareholders will probably find out what the outcome of that is, and then presumably there potentially could be some upside in that for shareholders.
Yeah, and Prospect could either potentially have 100% of that if it's a non-core asset because it's outside of Australia, or alternatively the whole thing's sold to the highest bidder, and then Prospect get a load more cash. So who knows? But I think if you talk about a safe-ish oil and gas play, then I don't think you can go too far wrong with Prospect Energy. I see it as a dividend play within sort of 12 to 18 months, once the type of money starts coming out. Yeah. So what target did we put on that one now? We started at 13.5p.
32p, I believe, on the target for that one.
Okay, so a good sort of 150% return or more. And I think, could be more, could be less.
Stick that in your post office savings account and smoke it.
Yeah, absolutely. And then we've already mentioned the next one, which again, Galileo Resources. We mentioned it in the tune of Jubilee and African Pioneer.
Yeah,
I don't think it's a
massive portfolio, isn't it? Though, really, it's almost, I wouldn't say too big, but it is. It's frightening when you look at the Star Mart, you look at the Afrimat, you look at obviously that. Hopefully, the cash will come in, and that will be announced soon. You've got the Zambia assets, you've got the Zimbabwe, you've got the Kamativi lithium tin. It's a massive suite of projects. Is that one, isn't it? Really, when you look at it, and all you need is one of those to come in, and I think we put a target on of about 3.9p, which is uber conservative considering you just need one. I mean, the cash they're in a cash position of around circa probably between 9 and 10 million if the once the Afrimat payment comes in, and they're in a strong position, Galileo.
Yeah, I mean, at 1.3p, they're not operating massively over cash, are they? Really, I don't think.
No.
So yeah, and I don't think it's a big shock that Luansabi, isn't it, is in Zambia? It's not a million miles away from what Jubilee's doing there.
Yeah,
and there's some connections going on there with Colin and and Jubilee, as he was the chairman. He's obviously no longer. So, I think people should be putting 2 and 2 together and coming up with 22, because ultimately, I think there's going to be some connections going on down there. But we'll see. We don't know for sure, but it all looks very prospective in terms of what's going on. And copper, gold, all sorts of stuff going on there.
Yeah. So moving on to, we've already talked the target for that one. So moving on to number 7, Contango Holdings. And then obviously Ben follows. Just happened to be that way, but obviously 2 coking coal / met coal projects. Do you want to take Contango and talk through where we are with that one briefly?
Yeah, I mean, it's the Lubu coal project in Zimbabwe. I think, again, there's been the story of different ones of these resource plays. There's been delays going through the 2022, but they've all cashed up now. They made a big raise there. I think it was in November, was it? 6p. And currently the share price is lying lower than that. Q1, at some point, we should be producing some sort of coal. There's all sorts of deals going on in terms of how they're going to do it. But effectively, in the long run, they want to do coking coal, which obviously takes some equipment and plant to produce the coking coal, or alternatively, the met coal to get off-take agreements and to go and get it. It's all about how quickly the cash comes. In terms of the sales will depend on how quickly the share price goes up, because I don't think there's any doubt it's going up. They've got the cash to do it. It's a case of how long it's going to take. So price currently 5.3p, and we have a target of 11p. Again, that could be very conservative if, this cash flow starts to come as soon as possible,
Yeah, I think we've had this question before, haven't we? Oh, well, this target, potentially, why would you sell all your stock? Well, it's not. It's just we think it may hit that target at some point this year, and whether you sell whole, make your own decision on what you want to do with it, because ultimately it may not end the year at that price. We saw that with Ben last year. Target was 80p. It smashed through 80p to £1.08, £1.09, but then it finished the year around 21 pence. So ultimately, if money wasn't taken off the table and you weren't nimble and thinking that you should have taken some profit, then ultimately, you're going to lose. You've got to take the money off the table, not all of it, but maybe a section of it.
Yeah, and for the sake of our portfolio, in terms of this, to see how our performance is in terms of this, if it hits the target, we assume it's sold. Okay, so and that's what we did last year, and we managed to get, I think, a 1% return in the year because we did that, or 0.5%. I can't remember the exact amount, but it wasn't very good. But if we hadn't have done that, we would have been down 30%, I think it was. So, there is some logic in actually, and again, set your own targets. We're just giving you a guide of
I think the reality
what we're thinking.
The reality is very rarely do shares hold on to that peak value, and you know what I mean, and then that becomes a consolidation, and then it becomes like a level to then grow. Obviously, we see levels on the way up, but once they hit that peak, very rarely do they the following year or 6 months later actually be anywhere near that peak. I mean, Argo blockchain was a great example recently, just going off on a tangent. What did it do? It did something like 1100% or something like that, maybe even more. I think it went from 4p to
it was up to £3, wasn't it?
Yeah, exactly. It may have even been like an 11th, like I don't know, 110 bagger or something like that. It was crazy. It did ridiculous level. Anyway, it went ballistic. And where did it end up at the end of this year? 4p. Back to the levels it was about 18 months, before it started its rise about 18 months ago.
Crazy. And then we've just seen a 200% increase in the last week or
because
whatever.
They announced that they've sold the Texan assets and are still retaining a percentage cut on them. Fair play. It looks like a good deal been worked, really, because there's no way that they would have continued to have traded if they hadn't have done that deal.
No, they got out of jail there, I think, and that has allowed them to trade and continue. So, yeah. So what do you think about Ben?
Ben's Creek, I mean, yeah, I'm shocked, and it's probably moves back onto what I just said, is how that didn't hold on. I mean, we know that there was extenuating circumstances. There was obviously a distressed seller in the background. We've seen high vol A, high vol B, met coal prices come tumbling down from the peaks around the, the 400s or 450s, whatever they hit. They're moving up nicely now back into the late 200s, which is quite promising. But I think it has to rise. I just cannot see how a company that has 11, maybe 12 trains have left, that they're nearly hitting those targets of, I think they announced, was it 76,000 tons, whatever it was, that the last figure we saw in the update. For me, it's only going to improve in terms of them getting the trains out rolling.
Yeah, I mean, basically, I think the market's waiting for a bit more news in terms of the high wall miner. But I mean, if you look back at where we were last year, we're cheaper than we were this time last year when we recommended it, and it went to 80p. It went higher than that, obviously, for a few weeks, and then it came tumbling down. I suppose with the met coal price, with the distressed seller, and basically with the worst market we've had in 50 years. So this is basically what happened. So do you think it's going to recover? How well do you think it's going to recover?
Yeah,
that's the only question you got to ask.
Yeah, exactly. You've got to ask yourself how well do you exactly that. Target price on that one we set to
60p.
60p.
Now again, we're being fairly conservative. I mean, if the met coal price goes to the late 300s, then I could, as in another $100 from where we are now. I think that 60p is a joke. It's going to be higher than that. Moving on to 9, Chill Brands. I mean, we talk about stocks going down from £1. Chill Brands down from £1 to 2p. We picked it last year as well. I'm picking it again this year. Last year, I really did think it was going to be the year, but we were fooled, I think, by the previous management. And I think most people now are very confident and very happy with Callum Somerton, who's now the CEO. He's got his head screwed on. He's making plans. He's reducing costs, and sales are going up. So, the whole plan to make chill.com a marketplace, I think is going to come together in 2023, and also sales of vapes and all the other products I expect to increase probably exponentially, because they're from a very low base, if you like, in terms of what they've done. So current price is 2p. We have a target of 5p on it. Yeah. Again, if the sales start rocking,
it's all down to revenues and numbers now, isn't it? Really, just to show some meat on the bone. It's as simple as that. There's no other way of
And I think revenues and profitability could grow very, very swiftly with a vape product,
and also with the chill.com marketplace as well. You need get as many resellers on, or not resell, but as products on there as possible, and the commission side will look after itself.
Correct, indeed.
All right, so number 10, Greatland Gold, an interesting one, isn't it? That it's had a market cap into I think it went over £1 billion at one point, didn't it? In its peak, we're talking about 2-3 years ago. It was over £1 billion pound stock on the AIM market. It was probably the most highest value AIM stock of not of all time, but probably not far off, to be fair. Obviously, Havieron gold copper deposit in the Patterson region of Western Australia. Fully funded this year. I mean, well, say fully funded, but certainly massive funding going on by big banks in Australia, and by a gentleman who owns one of the largest mining companies as well. So, I mean, what are your thoughts on that one? It's a steady burner, this one, isn't it? In terms of big assets, even bigger assets than Havieron as well. They think, don't they, with the likes of Telford, Scallywag, and all those. What are your thoughts?
Yeah, I think it's more than a one mine company, is my view on it. And the big boys called Sean Day's called his bluff, I think.
Yeah,
and basically,
Crest, wasn't it?
Yeah, and basically he blew them out the water because he went and got the money.
Yeah.
So I think they really didn't know. So now Greatland Gold sitting there with 30% instead of 25%, got all the cash. got the situation sorted out. Like,
they tried to play him, and he played them like a fiddle, didn't he, Mac?
Yeah, he did. He played them for sure. And we've interviewed him numerous times now, and he's a switched on guy. Like, he's a very nice guy, and he's like, you're not going to pull one over his eyes anyway. That's for sure. Yeah. So, and price now is around 8p. We've got a target of around 12p on it. Only 50% return, but at the same time, it could do much better than that. Yeah. We're in an environment now where I really do think 2023, we're going to see gold perk up. So if you start to see 2,200, 2,500 gold, then forget about our target, because our target's out the window, because I think it's going to be valued considerably higher. But again, what really, it's wrong to say it, but what really can go that wrong? They have 5 point something million ounces of gold already there. It's at a high grams per ton, and Newcrest aren't about to walk away. It's going to be a producing mine,
and they're pretty much at a, I'm not going to say an all-time low, because I remember when they were in the 0.5, 0.2p's, but they're certainly at near a 52-week low. I think the 52 low is around 7.3p. They're about 8.2, 8.3 now. And the high of the year of 2022 was in March, when they were at 17 pence or 16.9. So, they have dropped back quite a lot, haven't they? And that was actually obviously before the funding, so that they're in a much better position because they've retained that extra 5%, and they've got the money behind them to do what they need to do.
Yeah, I think probably the price now is probably lower than that 17p on market cap basis, but it's probably not 100% lower. But yeah, I mean, I think it's solid company, and it's one of the main reasons why we picked it, was because of the solid management, Sean, and all the people he's gathering around him, and yeah, it's going to be a world-class asset for the next however many years, decades.
Moving on, sovereign metals. What do you want to just give us a run through on that? I think potentially you may be visiting the mine in Malawi, might you? It's obviously at the moment ETF did not confirm, but there's potential for you to go there. I mean,
there's potential. I'm going to go to Malawi. I actually had contact again with Sapan today, just to find out what the itinerary was, because after the Indaba finishes, he's taken a couple of people to the mine site, and he's invited me to go along. So, I mean, basically, we've got the world's biggest rutile deposit and a huge graphite deposit along with it as a byproduct, if you like. And actually, the interesting thing is that Sovereign Metals were looking for the graphite. So initially, they were looking for the graphite and stumbled across the rutile, which happens to be the world's biggest rutile deposit. Rutile, what the hell is it? It's the titanium oxide. We need it in many things. I think we need it in paint. What else is it? It was
welding trade. They've got
welding. That's it. Yeah.
They've got offtakes with Japanese companies, haven't they?
And an American company
as well. So they've got a few offtakes in place. One with welding. But I mean, the one thing I like about it as well is that Sprott. Some of the listeners may know Rick Rule, who's a big. I think he's one of the major investors or backers in Sprott itself. He does a lot of the stock picks. He has been on many podcasts and YouTube videos. Just type in Rick Rule Sprott sovereign metals, and you'll see some of the videos where he talks about the ROI and the NPV, and obviously I think they put a buy rating of about $1.65 based on a 0.5 times NAV multiple for Cassia, holding the 1.2 billion tons of unmined material at just 0.15% in situ. And remember, this is hydro mining, so this is really, really simple stuff. This is like getting a very large water cannon, high pressure water, and literally blasting it against the surface, and it literally just falls away. It could not be more ESG if you wanted it to be. To you know what I mean? It's not really destructive mining in that. So very interesting play. And I think they're also spinning out the they're spinning out the graphite side of things, aren't they?
The other graphite plays that they've got in Malawi.
Yeah,
they're going to go into a separate company. So 1 to 11, if you own this share in the next few weeks, then 1 to 11, you'll get every 11 shares you have, you get a free share.
Which will be obviously listed, but that'll be listed on the Australian,
initially on the Australian, and then there was talk then that they probably would list it.
So conservative target on that one. What's the number?
We decided it would be 48p, which was the high of this year, of 2022. But to be honest, I think this one's in play. I think somebody could come in and just say thank you very much. Here's a very big check.
Yeah.
And that's one of the reasons why we chose it as well, because we really think there's very good potential here for some buyers to come in and say, yes, thank you very much. We'll have that rutile and we'll have that graphite. So we will see. Cool. I think there is going to be consolidation in the resource sector, because there's many of the end users of this are realizing they want security of tenure. That goes back even to the coal miners, the metallurgical coal. Why on earth, as a big steel producer, would you not go and buy a coal mine? You are in a billion dollar business.
Yeah, you want to secure your supply chain, don't you? All right, let's take the last one, helium-1, talking about NASA actually taking some of the helium on in contract, I think up to $900 an MCF, isn't it?
Yep, just over, and the market is looking at 450, 500 as a normal. But again, NASA wanted to secure that it had the helium, because if it doesn't have the helium, it's stuffed. Yeah. So I mean, this is an absolutely humongous project in terms of the amount of helium that's possibly there and the ability to supply literally the world with helium. So had bad news at the very start of this year. Obviously, they thought the rig was going to come very shortly. The people who had the rig basically contracted it for another 12 months. So the rig's not going to be available till next January. So I don't think they've let that rig go. But at the same time, they're now saying we're looking for another rig as quickly as possible. Yes. So drilled, helium comes up. It's going to be just like money coming out of the ground. It's going to be scary bananas, I think. Yep. Yeah. Current price 5.5p.
And then maybe there will be some sort of offtake with one of these majors. I mean, look at SpaceX. They did 60 launches last year. I mean, they're going to need something. Can you imagine that? Elon Musk banging on the door of someone like Helium-1 should they prove up this? Was it 135 BCF or something like that on their total P50 amount?
Yeah, but Elon Musk doesn't bang on your door; he just buys you, doesn't he?
Comes in with a kitchen sink.
And I think that is why there is going to be some M&A action in the resource sector, because people have got these assets and the downstream people want to secure the line of supply. So if it's there and it's pumped out the ground, then why not? Anyway, 5.5p price. We got a target of 17p. I mean, it hit that just on news of them drilling the first time. In fact, far above that. Yeah. So it's a conservative target.
It went into the late 20s, early 30s. There was I know for a fact it was up at that range. But and the thing about this document is we will put a link to this document in the description of the podcast. So if you want to have a look at these targets and a little description of each one of these stocks, the link to the podcast will be on the document as well. So should you want to listen to the accompanying podcast, then you can click listen here next to the name of the company and the ticker, and you will be then redirected to the podcast that was put out on one of the 12 stocks for the 12 Days of Christmas series that ran between Christmas and New Year. So thanks very much.
And I'd encourage you to do that as well. We don't just listen to our ramblings, listen to the CEOs, That's the whole point of what we're trying to do here at Roast PR, is that we're actually trying to give you the voice or the ear and the voice of the CEO. And we'd also like to say this week, we hit 100,000 listens since we started, so in just over a year. So thank you very much for everyone who's listened and who's been part of that 100,000.
Yeah.
We didn't really think it would be this size, but
and I hope that you've enjoyed it, and it's given you a bit of an insight into some of these CEOs and the companies, and also we've all learned from it, because we're all learning. We were certainly a lot greener when we started, but every day is a school day, as you say. So
every day is a school day, is right. Yeah, we certainly don't pertain to know everything, that's for sure, but we will endeavor to learn more as we go along.
Let's have a look at some of the week's AIMS highlights then, and maybe low lights, if you're however you want to call it, the winners and losers. The first one was BidStack. That had unfortunately a bit of a bad week. I think it was down about 30% to 5 days. They announced they were commencing legal proceedings against its partner Xerion to pursue withheld payments from the sale on their in-game advertising inventory. Rumblings of a souring relationship started last year when BidStack alluded to the receipt of emails from Xerion raising concerns about their agreement. And I think they finished the day around 1.95 from the sort of mid two. So market cap 25 million. That was one of the worst performers in the week. But on to one of the best performers. I think one day this week I looked, it was up about 150%, which in this market is pretty rare, isn't it, these days? It was GENIncode, GENI is the ticker. Have a look at it, the performance over the last 4 to 5 days. They achieved a major milestone in the journey towards commercialization of their cardiovascular disease products. GENIncode received approval from the Californian Department of Health for their CardioEncode product that measures the inherent risk of cardio disease. The approval means that GENIncode can begin to sell their products across the US. Market cap of still only 14.9 million and a share price of around 15.5. I think it finished the day around 14.5. Still looks undervalued to me for a pharmaceutical company that's got a pretty groundbreaking product there in a very apt area at the moment, with cardiovascular disease on the rise.
It's interesting. We should try and get him on, Phil. You need to work your magic next week and try and get the CEO on, because that sounds amazing.
Another couple, Cleantech Lithium. That's one that's a big retail following. Aldo, as we've talked to Aldo in the past, they actually won the UK Investor Magazine Best AIM IPO of 2022. I think Ben was actually in the running for that. I don't know how it did, but I certainly know it was nominated for that award. Cleantech Lithium released a scoping study for their Laguna Verde lithium project in Chile. The study estimates $6.3 billion will be generated over the operational life of the mine, with a low operating cost of $3,875 per ton of lithium carbonate. And the capex is expected to 383.6 million, and the project's NPV is 1.83 billion with an IRR of 45.1%. So it's all looking very rosy for them. Market caps around the 40 million mark and a share price of 36.5 pence. The ticker is CTL. So have a look at that one if you like a lithium play.
Yeah, and just to finish the week off, really, the copper prices continue to increase. We're now firing in on the close to the fours, 3.91, as up 2.5% on Friday, and the gold price roaring away there as well, up 1.62% to 1863. And all that on the fact that the dollar seems to be stationary. It's having a battle with itself on this dollar index of 103, 104. It's obviously fallen from 114, 115 over the last month or so, sort of 10% decline, and it's now having a real fight with itself. 103, 104. If we see that break, we're going to go sub 100, I think, and you'll see the dollar start to go down a bit more, and you'll then see copper and gold and all the metals start to increase in value again significantly.
Yeah, I think FTSE's had a good week. I think it added about 3.3%, and then the FTSE 250 was 3.5. AIM all share was 1.9. So it rose to 7699 did the FTSE 100, which is pretty damn good, isn't it? Really, when you consider that the current the uncertainty, the strike, the inflation, the FTSE is holding really well compared to some of these small, the nano cap, small cap stocks, and just not getting the love that they deserve at the moment. But hopefully that changes. Conflicted readings of the US economy in the stride would be taken in the stride. Miners obviously leading the way in London with hopes of a China reopening still front and center. I mean, I think that's the reality is on the FTSE 100, it's the miners that are really showing them how to do things.
It's amazing, though, when you look at the long-term FTSE, because, back in 2005, the FTSE hit 6,800. And how many years is that? 18 years later. 18 years later, we're at 7,700, and the all-time high is only, I think, a few points higher than that. So effectively, we've done, if you're a FTSE watcher, you've done maybe 15% in 18 years, if that's the case. Yeah. I mean, I don't think that's actually real, because some of the components have come out, some new ones have gone in, but in the last year, we were lower, probably at 6.8, than we were 18 years ago.
Yeah.
So, it's ridiculous when you look at the S&P 500 and go back to a maximum scenario there. And, at that same time, probably the S&P was a 1,000, and it's now at 3,868. Yeah. So it's more than trebled. Or it has trebled and has gone to a high of 4,376.
Absolutely. And I think we talked about this a couple of weeks ago, didn't we? Where we said that the high interest rates on savings are deterring people from investing in the likes of the FTSE trackers, the funds, because they're getting the same amount, if not more, from these high interest savings accounts that are just now coming to market around the 5-6% that we're seeing. And the FTSE finished pretty much flat parity, didn't it, over the same year? So ultimately, where would you rather have your money if you want to guarantee that 4 or 5%? You're going to put it into savings, aren't you, when the FTSE is performing? So what we want to see is the FTSE continue to move up. People will then come back into the market.
Yeah. But the interesting thing was that a lot of the commentators had started to say that the most undervalued market in the world, one of the most undervalued markets in the world now, is the UK.
Yes.
And that's twofold, because of the currency exchange. Because if you actually factor in what the dollar pound was in 2005 compared to what it is now, we've probably actually shrunk. We've probably gone down. But now at 1.2 or thereabouts for the dollar, it's now very, very attractive for the rest of the world to invest in the UK, both from a dividend point of view and resource play point of view. Well, now, if that starts happening on the FTSE, there's going to be a trickle-down effect where we will get it in the small caps, I'm sure.
I mean, we know that because the UK slipped behind India, didn't it, to become the world's sixth largest economy. So we lost a spot, basically, and that's telling. That was from around the time of the old the mini budget, when the dollar, the pound weakened so much against the dollar, and obviously GDP being down, probably Brexit woes as well. So ultimately we've lost that place. I mean, India is obviously a much bigger country in terms of not only land mass and population, but to see UK drop behind India is pretty special, really.
Yeah, it will never get back above it, probably, let's be honest.
No.
Because India is going to get bigger.
It's an emerging, it's what they call the BRIC economies, isn't it? It's like the Brazil, Russia, India, China. They're the four emerging. I mean, Brazil's something like third or fourth, isn't it now? It's amazing, is Brazil, their economy and the GDP. One thing I have been doing, just on a completely different note, is been getting obviously into other podcasts, and one that I've found, this is just completely going off markets now, is one. I don't know if any listeners actually watch the series called Tokyo Vice, which is a BBC. I think it's with HBO as well, like a synergy. It's a drama series that obviously set in Tokyo in the sort of late 90s. But there's a podcast that's from the creator of that, by a guy called Jake Adelstein, and he basically true story that happened to him in 2018 when his accountant vanished without a trace. And Adelstein, obviously the author of the HBO series Tokyo Vice and co-host and Japanese-American reporter Shoko Plumbeck, tried to track down that missing accountant, in the process investigating Japan's juhatsu, or evaporated people. And it's thought that as many of these disappearances are deliberate, and the show explores the infrastructure that helps people leave their lives. And there's a concept out there called Yoniga, which is night moving company, and it examines the reasons maybe people disappear, from debt to domestic abuse, and the shame attached to it. So have a look on Spotify for that one if you want a bit of, let's say, intriguing listening. It's called The Evaporated, Gone with the Gods. Something a bit different.
Yeah, interesting.
On that note, anything else for next week? Anything looking forward to? Do you think that people will actually be back in the office next week, well, after their extended break?
I think so. I think we're going to start getting back to, in inverted commas, normal. And yeah, let's see what happens. I mean, I'm ever the optimist, obviously, but 2023, I think we're going to have a rocky few months. But then I think the markets are going to start seeing the light at the end of the tunnel. And I expect then the money will start to come back into the market. And if this is true, that the UK is basically seen as a great place to invest in terms of value at the minute, and money starts to pour in, we're going to see big moves. I think we're going to see big moves in stock markets, because it's massively undervalued.
Good. Well, let's hope that comes true. And I look forward to speaking to you next week. Have a good rest of the weekend, what's left of it.
Indeed. And thank you for listening, everybody.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.